So, hello everybody. Hope everybody's had an awesome weekend. This is 50 pips, 2nd of February, 2014. Not making any trade calls or recommendations, as you and only you are responsible for the trades you may decide to take. The fact that you're listening to this means you're ready to understand. You accept all the disclosures, disclaimers on the blog, understanding that we're here just providing some technical analysis for learning purposes only. So, what's going on, guys? Basically, we should have a pretty interesting week ahead. Okay, so first things first, just a reminder that it's going to be a very busy week because apart from all the PMIs, etc., we've got the RBA with rates on the wires. We're going to have the BOE. We're going to have the ECB. We're going to have non-farm payrolls. So clearly, if anything is going to change, right, it's going to be likely it's going to happen this week. So what this week has the potential is to strongly confirm the most recent retracements we're seeing, right, or basically to completely break through levels and move a lot more aggressively than what we've seen this week, or just reverse the most recent course of action. So it's going to be very, very interesting. So if we start on the ES, which is similar, we've been talking about the ES and about the fact that we're essentially stuck at highs between these 1850s and 1750s, and we said that, you know, as long as we held below the 1800, we expected this to trade relatively heavy to try to continue to move back towards those 1750s. So you see we had a very nice action this week because we broke below the 1800 and all the moves back into the 1800s got sold for back into this low range, and this low range, as we expected, kept on getting bought. Now we've got three moving averages here. This is a daily chart, 50, 100, and 200. So this is the first buy zone, right? So as long as we hold the 1750s, then I would expect the market to continually try and test this 1800 until we break higher and then take a stab at those highs. If we break this area quick at the start of the week, then I think we could easily see a continuation back into the 1700s, and that's going to come in line with the 200-day, and that's most probably going to be an interesting buying opportunity, maybe even if it's just intraday. But I would expect this support to hold. But the only thing I would say is, as we've been saying for a long time, the market's been moving aggressively higher. It would be healthy to see some kind of a correction. So even though we've had a decent correction, it's not the end of the world. Everything isn't crumbling. It's still just a healthy correction, and even a move back into 1700 would still be a healthy correction. Of course, the velocity of that correction, you know, you wouldn't want it to happen in one day, right? But still, it's a correction. So watch going into this week. As long as 1750s hold, we'd expect to see 1800s tested. If these break early, we'd expect to see back into 1700. But this is no change on the chart, behaving quite nicely. And you can see also, because a lot of people were asking me, if you flip over to the YM, it's been very, very heavy, right? And the moment we broke below 16150 level, below that 50, we really started to move aggressively to the downside. But right now you see that globally speaking, we're still hovering at that bottom support we'd identified a while back. It's quite interesting. If you look back on your chart, you see previous resistance acting as support again. So very technical level. You've got the 200 coming back into this zone. So, you know, as long as we hold above the 15,500 level, this should continue to hold a bit of a bid tone. But this is just want to show you the Dow chart, because a lot of people were asking about it, but it's exactly the same kind of consideration as on the ES. Okay, then we have a couple of let's do gold, and then we can move over to the futures. Gold is still hovering around the 1250, still a pivotal zone, you know, pretty much in line with the market. I think something which is interesting is just keep in mind, you know, some people were asking me about these ranges again, and where it all starts is we had this initial aggressive move down here on gold, and the 1300s were protected, right? Every dip into the 1300 kept on getting protected quite aggressively, well ahead of the number. And then once we broke through, this is when it started to get heavy, right? Even though the retracements managed to get back into the 1400, you know, this break really weakened gold, and, you know, ultimately led to this very technical move back to the downside, double bottom here at 1200. So as we're hovering here at these 1250s, you know, this is just the chop zone, right? It's a really choppy area, and most likely the market has to make a decent sustained move to see this you know, get traction either side. But 1250 is still pivotal. Below, you know, we could see tests back in the 1200, but as long as we hold this range, range, we'd expect to see a move back into the 1300, and then that's going to be the new pivotal area for a mini range shift here. But right now, no change in gold. So I'll update the chart and I'll update the outlook, but it's, you know, for a while, it's all about the 1250 pivotal for action. Not a lot has changed. What's going on USD JPY? This chart we had just going to explain again. Some people were asking about it, and what happened is clearly we had this very aggressive move down, and we caught this nice 4-hour reversal band. We moved back up, and I started posting this chart once we held this, and what we were saying is, you know, because a lot of people were tweeting asking if they, you know, if I'd be buying here, and of course I don't give trade recommendations out on Twitter. I can't comment on people's individual trades. The only thing I said, you know, I posted the chart saying you have to be, you know, cautious here because this is a big pivotal level, right? So you want to look at action above here. If we can't hold above this area, right, it's going to be very, very difficult for this to rally. So clearly, what you want to look at is also how the day close around these areas. This is a 4-hour chart, and you see that we attempted to make presses higher, but bam, weaker again, same level, got bought again, bid supporting. So I think like everybody, it's, you know, no secret, everybody I would suspect going into the week, right? Everybody's watching what's going to happen 101.80s, right? This is likely going to be the line in the sand going into the week. And if we get traction below, and if we hold below this support zone, what is a support zone now, then what I would be looking at this week is to the pair to try and make its way back down into the 100 level, where I'd expect to see buyers coming into support. If we get another hold here with a bid supporting and we start getting, again, daily closes above this level, then I think the 103.80s will come into play. Clearly now it's just been sell the rallies, market just selling every single rally, but going into the week, this is the key zone. So this is what you want to watch, what you want to keep an eye out for. Now again, another thing which is valid not only for the yen, but is valid across all the pairs, is don't necessarily be fooled by action at the beginning of the week, because keep in mind that as we go into the RBA, ECB, BOE, and non-farm payrolls, those are going to be the big events, right? And so it would not be uncommon to see, you know, 200-300 pip moves into those events, but still, unless those are over, we'll have a much clearer picture, you know, at the end of next week and the next week. This week, a lot of things can happen, you know, the cards can really change. What's going on here on Aussie? Again, pivotal level. It's trying to base now. Of course, we got the RBA, so I don't think the consensus is for a rate hike. If they hike, then that could be. I'd be very cautious staying to the short side. At the moment, we're hovering here, and this is just the pivotal zone. You know, market's looking for direction, and not surprising. It's trying to base, but it's having difficulty getting traction to the upside. And this is the zone to watch until we get into the RBA, right? Most likely, you'd expect to see maybe some shorts try to take profits. We might see repeated presses into these highs. If we break, we could come back into this 0, into the 200 to the upside. And on any pressure down, we might see a move back around those 86.60s, but I would suspect that we will not see a sustained move outside this range until the RBA is over and done with, or towards the end of the week. Okay. What else have we got? We've got CAD. CAD, we've been talking about this level for quite some time, and what we're saying is there were a lot of nice little zones to try and play the downside. Not all of them worked. And again, it's clearly not a trade you want to be stubborn trying to fade, but what we said is we expected basically everybody and their hamsters and their pet turtles or whatever, all the longs, to start to have profits as soon as we broke through that 112 into those 1230s. We'd expected it's a bigger 50 back. It's not one we would trade as a fib, but it's something you can look at on the monthly charts. This 50 back zone coming in at 1230s, we'd expect to see a lot of profit taking coming into this area, right? And you see exactly how this traded. So the market looked like it tried to pause a bit ahead of that, but it just bam, went through those 1200s just like clockwork, sorry, 112 is like clockwork, and all the profit taking comes in, and again, very difficult to find new buyers at highs, and bam, we get a little reversal, right? A lot of people thought that it started to reverse the day earlier, broke. I actually tried to play some shorts off this level, got some off B, got stopped out. I tried quite actively here to just try to scalp some downside, but pretty unsuccessfully, but you know, worth a shot. And right now, again, it's a very interesting short setup. Going into the week, what you want to keep an eye out for is how we behave here, this previous breakdown zone. So I think clearly there, if it's going to correct and we're going to see a bit of a retracement, this is the ideal place for it to happen. To the downside, what I'd watch is any moves back into the 110s, 109, 110s. That's going to be the first level to watch. Should see buyers coming in. If that breaks to the downside, then I look at 108.50s, and ultimately, you know, if something should happen, because we're doing this review for the week in terms of what comes out on the wires, I think the biggest possible target would be, you know, the 107s, but that's a huge move, so it's clearly not something I expect to happen in the card straight away, but that's just the level, because we try to do these outlooks for the bigger picture, right? And to the upside, I think the focus is going to continue to remain those 1230s. I'd still expect to see shorts protecting this level. I still expect to see profit taking here, so that's what I'd be focused on. So I think even though clearly the pressures to the upside, I think at the moment, you know, the odds favor, or the velocity of the move favors trying to look at some moves to the downside. We'll have to see how that plays out this week. And then we've got Euro and Cable to finish off, and what's going on Euro and Cable. So Euro, we had this chart posted here, and basically what we were indicating is that this was the first line of support, right? This was, if it was going to catch a bid, this is where it needed to catch a bid, okay? If not, it was going to continue to trade heavy. Now, if we go back onto our more familiar chart, which we're looking at, you know, what we'd been saying all this time, basically since the beginning of the year, it was saying a bit stubborn, but we said it really looked like every dip kept on finding buyers. You know, even though it found aggressive moves to the downside, it kept on finding buyers. So we were still of the idea that we'd continue to try and make a move back into velocity of the move would be for a move right back into those 3750s, 3770s, and we did get that. Ultimately, we did that move. Very nice action. Once we press here, is just completely unable to hold, and we started to roll back down, roll back down. You see right here, we had two attempts when the market clearly tried to buy this zone, and we talked about this 3650, 3600, right? We kept on talking about that zone, and we said this was the pivotal zone, right? If it catches a bid, then we're looking for more upside. But if it starts to take out those 36s, you do not want to stay stubbornly long here, because unless you're looking for intraday scalping opportunities, this is most likely going to continue to be heavy, right? And indeed, it comes back down in very slow, choppy, liquid market. It can't find any bids here. You see some buyers trying to support ahead, then it just completely goes through. So going into the week, what I would keep in mind is, first of all, that the 200-day is coming up here in line with those 34s. 3450, 3400 is a big level. So going into the week, that's the level to watch, right? I would not be surprised to see this continue to try and make its way all the way back down into this zone as it's holding heavy, especially if it can't catch a bid early on Monday, right? This would be the first support zone, expected to find some kind of support here. If we break lower, the next big level to watch is the 103s, right? And on the upside right now, the 3650, 3600 is going to be the resistance now, and expect all the shorts to continue to sell into any press into this level. So of course, big question is, are we going to get a rate cut or not out of the ECB? I personally think that I don't expect one really, but if we do, I expect that to be relatively priced in by now, but who knows? And again, I really don't care what happens. The only thing I'm going to do is trade how price reacts at levels. So the way I'm going into the week is major resistance is 3650s into 36s. Major support is going to be into 3450s, 3400. This is the zone I'm looking to play, right? If we break outside that zone, then to the upside, that whole 37 is going to come into play. If we break below the 3300, I would expect to see action contained here at least until the end of the week. If it trades below 33, then it'll likely get very, very heavy. But again, I'd suspect it to stay relatively range bound into the decisions. We'll have to wait and see, and we'll review and see what happens. Going on to last, but definitely not least, what's going on cable. So basically it's continued to hold a very aggressive bid tone, and then it just completely let go. I suspect just a lot of profit taking into the end of the week, slow markets, end of the month rebalancing, etc. And what's happened is come back down into this famous level we talked about in one of the earlier reviews, and we said the moment we broke out of this area, we said, remember when we had a review, it broke down, we said, if this gets into here and breaks, then it's very heavy, but don't be fooled by this move down. It would be unlikely for it to retrace big part of this move very quickly, but if it does, it means that this level is going to be supported, and you don't want to be stubbornly short here. You want to wait for the level, right? So the real level is the 66.00 into 66.50s, right? That's the short zone. That's where the shorts came in. That's the highest odd short. So once you got this aggressive move, this was clearly not one you wanted to fade aggressively. You wanted to let it come to you and then fade the bigger resistance zone. And right now we're back into the support zone. It catches a bid on the first time. You see that, catches a bid. As soon as it presses into this zone, bam, it pops about 70 pips, and then it can't hold it in that Friday action, Thursday, Friday action. What I would be looking going into the week is, do not forget the importance of the 63.50 into 62.50 zone. Clearly, if we come back into this area, this is going to continue to trade very, very heavy. The bulls do not even want to see this area tested. The bulls want to see this continue to break higher from here. Right now, we're still in a very choppy zone. I would expect this is going to be the key support going into the week, and the key resistance is going to be those 66.50s into 66.00s. Okay, so basically what you have here is about a 250 very, very choppy zone where price could move very, very aggressively, but I'd expect the big players to be positioned at the extremes. Again, I suspect that especially if we don't go back down and test those 63.50s, we're going to have to fail from higher levels if we fail at all. So again, keep in mind, a lot of stuff going on this week. It'll be very interesting. I'm looking forward to this. I'm ready to go. So again, I hope everybody's had a great weekend. I hope everybody enjoys the rest of their weekend. If you like the content, don't be shy about sharing it, and I'll see you guys on Twitter. Have an awesome one. Thanks for listening. Peace out. Bye, guys.